right, JC, fresh off of the March monthly conference call, let's talk about rotation into value. Is this for real? This is an episode of Bearish and Bullish, in case you didn't know. So what are you, bearish or bullish?
It's hard to be bearish of value when we see continued resilient strength out of financials, strength out of natural resources, industrials. I mean, for me, it's hard to ignore that. We've been seeing this really start since Labor Day of last year. It really broke down and really started confirming when we saw that move in bonds in February, and it just continues. So I'm not going to be the one to fight it. We've been talking about it. We've been taking advantage of it, and it just doesn't look like it's over. If anything, we're much closer to the beginning of the rotation into value than we are near the end. That's been our bet. That continues to be the bet.
Yeah, and to that point, you came out the gate swinging with financials breaking out of a 14-year base to new all-time highs. I mean, how lucky are you if you bought in 2007?
Man, you've been waiting for 14 years for this breakout. You're busy buying Bear Stearns and Lehman Brothers and all sorts of disasters. 14 years it took, which makes sense. I mean, it had a killer run into that great financial crisis peak. These massive crashes take a long time to resolve themselves. Look how long it took technology after the bubble burst 20 years ago. It took forever. So this is no different. But the longer it takes, the more powerful the resolution. And we just saw what tech did after tech ultimately broke out and really ripped. I mean, just imagine a world where financials are about to do what technology just did.
All right, and moving on, I know that you always make fun of Californians, especially when we complain about gas prices, oil, 200 oil, $10 copper. What's going on there?
Listen, my making fun of Californians is strictly out of love. I love California so much. It makes me so happy. I was able to live 5 years in California, which is absolutely amazing. So it's all in good fun. The pizza sucks, but everything else is really great. The tacos are out of this world.
I agree with you, by the way. The pizza sucks. The tacos are amazing.
The bagels are embarrassment to bagels all over the world.
Did you see that New York Times article where they actually had the audacity to make an egregious claim that better bagels are found on the West Coast?
These are the same people buying growth stocks and selling the value names. Julie, I got to tell you, this whole oil thing, the whole energy thing, it's part of that value rotation. Investors just don't have exposure to these areas. I think that a world of $200 oil, maybe even $10 copper. Listen, I'm not saying that's what's definitely going to happen. I have no idea what's going to happen. But I do know that investors are definitely not prepared for that. And that I do know. And when investors are least prepared, that's what I've learned over the years is what they need to be most prepared for. So I try to think about what that world looks like. I have no say in the matter. People are going to complain about high oil prices and high gas prices and how that affects the economy and inflation. People are going to complain and complain, but they're always going to complain about something. That's just going to be the complaint of the day. I'd rather be sitting there being like, hey, thank God we loaded up on all that energy back in the day because we're thrilled about this. That's sort of how I imagine this going.
Okay, well, what is the biggest bubble that you're seeing right now?
Wow. To me, there's just so many bubbles out there, and I think a lot of them revolve around this. One of the bubbles is the lack of commodity exposure. Investors somehow convinced themselves that there were only two asset classes, stocks and bonds, when the way I learned it, I'm old school, I guess, is that there are three. And just because commodities have been dead for 10 years doesn't mean they didn't exist anymore. They had their cycle, they had their down cycle, and now clearly they're having their up cycle once again. So the biggest bubble might be lack of commodity exposure. Another interesting bubble that I find I find opportunity in recognizing is the home country bias. And it's not just Americans that have it. You see it all over the world. Travel in Asia. You go to the Philippines, all they want to do is buy Filipino stocks. And it's like, well, there's all this other stuff over there. So it's not just an American home country bias. The difference is that Americans have been rewarded for being irresponsibly exposed to American stocks and growth stocks and tech stocks. They have been rewarded handsomely, I might add, while other citizens of other countries have been penalized for having that home country bias with too much banking exposure, too much natural resource exposure, and then not enough tech, right? That's been their problem for so long. But I think that the lesson here is to not have any bias at all. Who cares where the hell you live? If you have the ability, which many countries do, to invest in equities and securities and all over the world, right? A lot of investors around the world have that ability. Not all of them do, but most of them do. I think that those are two really interesting bubbles, and the unwind out of those, I think it's going to take a long time. We've seen some of it. We've seen a lot of it, but there's no evidence that, we're not near the beginning. I think this is just getting going.
Why is ESG investing such a big scam, in your opinion?
California. They love ESGs in California. They love it. Everybody wants to save the world and hug a tree, save the world through their portfolio. It doesn't work that way. Like,
I feel attacked.
What?
I feel attacked. I would like to save the world through my portfolio, JC.
You are welcome to do that. We live in a beautiful country that will allow you to throw money away all you want. You're welcome to do that. In fact, a lot of people are doing that, and it's up to us as investors to take those donations from them, right? So you can't save the world through their portfolio. Like, there's no evidence of that at all. All it means is that you're going to underperform if you are in these ESG stocks and you're not in the, what we want to invest in are the grossest, dirtiest companies that pollute the world the most, and the companies that build the machines that pollute the world and take natural resources out of the ground. Those are the stocks that we want to be buying in. And
Keystone XL, you're all about it.
You're ignoring those stocks, you're not making money. And here's the lesson, Julie. If you are in the market, and not just you, but any investor, if you are in the market for any other reason at all, other than to make money, you are very, very confused. We see it in politics quite often. When I was living in California in 2016, all the, far extreme liberals were like, oh my God, sell all my stocks. Trump is going to ruin everything. And they sold at the wrong time. And then you also see it with the far right. When Obama won, it's like, oh my God, the world's going to come to an end. Sell all the stocks. When those were opportunities to be buying stocks, but people that were trying to express their political views through their portfolios got smoked. And it's the same thing with ESG. There's no reason why you should invest more money in a company because there's more women on the board of directors, or because there's they're cheating the system and quote unquote polluting the environment less. Like, it's all a bunch of nonsense. We want to be buying stocks that are working. We want to be selling stocks that are not working. What's going on in between, it's a great Wall Street scam. I mean, it is fantastic. They have made so much money convincing investors that they can save the world through their portfolios. Like, kudos to them. But the truth of the matter is, and it's easier to convince investors of that when those types of stocks are doing so well, particularly relative to the gross energy and commodity names that have been doing terrible. It's easier to sell that story. But if we've learned anything over history, is that money's going to chase returns. There are no morals in institutional money flow. I promise you. They are only there for a buck. And if you don't recognize that and you try to fight that, you're going to get steamrolled.
Take the emotion out of it, as you always preach.
I agree.
Who cares?
All right, let's talk a little bit of sports here. Bearish or bullish, Blake Griffin to the Nets. Are they the most powerful team in the East, in your opinion?
I mean, it's hard. I'm a Heat fan, so that's, that I think Miami matches up well against them before Griffin got there. So, I think that probably, I hate to say it, it's going to give Miami a tough challenge coming out of the East. But what I will say is that I did watch him. I don't know if he was already checked out, but I watched him play before the trade. He looked like crap. But again, I don't know if it's because he's lost a step and he's old and the whole thing, or because he was checked out. I think he may have been already checked out, and now that he was with a legit team, that might fire him up a little bit. I'm a little bit afraid that that's exactly what's going to happen.
Well, listen, New York is a tough market to play in. JC, thank you so much for all this and so much more. You can check out allstarcharts.com.
Adios.